Hi everyone, my name is Paula, and I want to share what my team and I have been working on for the last few weeks. We have identified an unusual event that might affect the market and want to suggest one stock to buy and one stock to sell in response. In 2024, there will be a possibility of a bioinfestation that could impact global sugarcane farms and the production of biofuels. This could lead to energy market and industry repercussions worldwide, as biofuels are a preferred source of renewable energy. However, this risk is currently not priced in by the market players, who expect a smooth supply chain. In response to this unexpected event, we suggest buying British Petroleum, a fossil fuel company, and selling Wilmar International, an agricultural company. Now, Karim, Nick, and Josh will walk you through our macroeconomic analysis, as well as our buy and sell recommendations.
Thank you. As this graph shows, the demand for biofuels, particularly ethanol, which is mainly produced from sugarcane and molasses, has significantly increased in recent years. And this is expected to continue to grow due to a shift towards more sustainable energy sources. This is due to a global commitment to reduce reliance on traditional fossil fuels and highlights the importance of the role of biofuels in our energy's future. Countries around the world are integrating biofuels into their energy policies to address climate change and ensure energy security. To gain a better understanding of the impact a global biofuel shortage could have, we analysed the oil and fossil fuel markets and how they have responded in the past during times of scarcity. By examining the market movements, such as those illustrated in the graph, which show oil and LNG prices, we can identify patterns that reveal how the fossil fuel industry behaves during crisis. This information can provide valuable insights into how biofuel prices might react under similar global stress scenarios. This graph illustrates how wholesale electricity prices in the national electricity market have shown a sharp rise in 2022. This sudden surge is primarily caused by supply disruptions in the oil and fossil fuel industries. Similarly, if disruptions occur, we can expect the biofuel markets to experience the same level of volatility. Historically, shortages in the oil sector have led to sharp price increases and record profits for the producers. However, a key difference in the biofuel industry is the ability of major consumers to switch back to traditional oil and fuel sources almost instantaneously. Therefore, in the event of biofuel shortages, we might not see the same spike in prices or profit. Instead, a decline in biofuel demand could be expected as consumers revert to more readily available alternatives. Now introducing Kareem to go through our buy recommendation.
Thanks, Nick. Reviewing our coverage on British Petroleum, which is ranked as the 10th largest oil and gas company in the world based on market capitalization. The company operates in the exploration, production, and distribution of oil, gas, and renewable energy sources. Given the increasing demand and prices for conventional energy sources like oil and gas, we anticipate a steady revenue growth for BP. Our forecast model indicates a projected share price which is 264% higher than the current market value. The drivers of this optimistic forecast are rooted in a bottom-up approach, with our findings highlighting that approximately 76% of BP's operating revenue in 2023 was derived from its downstream business. We anticipate a continuation of this trend in the foreseeable future, and we forecast a steady increase in BP's operating revenue due to growing demand for traditional energy sources from end consumers. We are pleased to initiate coverage of British Petroleum with a buy rating and a target price of $23 based on a DCF valuation model that incorporates a WACC of 5.78% and a terminal growth rate of 1.03%. As a mature company, BP's beta remains relatively stable at 1.14, and the company's strong ability to service its debt has kept its cost of debt low at 4.7%, driving a lower WACC. Our sensitivity analysis reveals promising positive outcomes in various scenarios when considering changes in the WACC and terminal growth rate. With a 264% upside potential to the current market value, we believe that BP presents an attractive investment opportunity. Our buy rating reflects our confidence in the company's ability to generate strong returns for its shareholders over the long term. I'd like to welcome Josh to run you through our coverage on Wilmar.
Thanks, Kareem. Wilmar International's business operations involve significant participation in sugar merchandising, milling, and refining, making it vulnerable to a global sugarcane crisis. Sugarcane is a crucial component in the production of several Wilmar products, and any disruption in the supply chain could adversely impact the company's production costs, supply chain efficiency, and overall profitability in the sugar segment. As highlighted in the graph taken from Wilmar's 2022 financial report, sugarcane is used in a number of operations, such as food products, feed and industrial products, and plantation and sugar milling. This accounts for approximately 91% of their profit. To account for this potential shock, we modelled a steep drop in revenue growth of 75% with steady declines in expenses, simulating Wilmar's response to the crisis. Based on these conditions, we predict a 52.1% drop in the company's share price. falling from $2.52 to $1.21. Therefore, we recommend Wilmer's international shares as a strong sell recommendation.
Thanks, Tim. To summarize, an event like this may cause a shift back to fossil fuels. Holding a long position in BP could yield significant returns as the company may offer efficient and cost-effective alternatives to biofuels in the form of fossil fuels. Conversely, we recommend taking out a short position in Wilmer International. Thank you for listening. Have a great day.